Good afternoon, I'm Becky O'Connor from Good With Money, and I'm here today with Maike Currie from Fidelity Investments to talk about a new report that Fidelity has just launched called The Financial Power of Women. It focuses on the barriers to women investing and also suggests some solutions, some of the ways women can get started with investing and overcome some of the issues that are stopping them at the moment. Maike produced the report and is going to talk to us about it. Thanks for agreeing to talk to us.
So, my pleasure.
Women don't invest as much as men, and there's no particular reason for that, as far as I can tell, besides the things that you've identified in the report, which, hooray, are surmountable. But perhaps you could explain why women don't invest as much as men, according to what you found through the research.
Well, the first reason, and probably the most obvious reason, is the thorny issue of the gender pay gap. So if you earn less, by definition, you'll be less willing to take risk with your hard-earned salary. The other issues are things around biology, the fact that a lot of women take career breaks, that impacts their earnings potential and by default their investment potential. So that's often referred to as the motherhood penalty, so those years taken out of a career. But also women are still more likely and more conscientious when it comes to taking a break to care for a sick or elderly relative. Again, that impacts your earnings potential and that impacts your investment potential. So those are the personal barriers. Beyond that, there are barriers posed by the profession. So a lot of women told us that they don't understand the terminology used by the investment industry. They still don't trust providers, and a lot of them simply think that investment is not for them. So the irony is that there's this confidence disconnect. So we take a lot of financial decisions, as many decisions as men, often more decisions, and we're confident taking those decisions, but we still shy away from investing.
So if we're confident and we are able to make financial decisions, what is it about investing in particular that poses a problem for women?
So I think women are a lot more conscious about what they don't know. So we don't want to take the plunge unless we've done enough research, unless we feel we really understand the subject matter, and often we just don't have the time. So time and feeling that we don't understand the area of investment. But a key issue, and an issue that I've spoken about quite a lot, is the lack of role models. So if you don't have any women in your family investing, if you don't see any women in the industry, we know that there's a chronic lack of female investors, famous female fund managers. If I asked you to name a famous male investor, I'm sure most of us would be able to come up with a name, at least Warren Buffett or Neil Woodford. But it's not the same when we're talking about women, and that lack of role models really is an issue. It's that notion of if you can see it, you can be it. And we really need to address that because, women make so many decisions. We are increasingly the main breadwinners. We manage the family purse strings. We are the ones teaching children about money, but we're still not investing. And we did some number crunching in the report. The fact that a lot of women are diligent savers, and we see this reflected in data around ISAs. So overall, in the UK, women hold more ISAs, individual savings accounts, than men, which tells me that we are diligent savers. However, if you drill into the numbers, we hold far more in cash ISAs, whereas men hold stocks and shares ISAs. Now, you know the story. Over the last 10 years, interest rates have gone nowhere. So if you've left your money in cash, you would have had a very paltry return, probably 0.5%. If you'd invested it, say, in the UK stock market, you would have probably got a return of around 25% just in the last 4 years. And we know that markets like the US, global markets, have done even better. So that's the whole notion of unlocking women's financial power. Because we are sitting in cash, that caution comes at a cost. And we're not only losing out on long-term returns, the family, society, the economy is losing out.
And is this because of that women are more risk averse? There is more of a fear of loss? And to what extent does that tie in with their role as mothers and keepers for the future of family wealth?
I think it's a very important question, and I think fundamentally women think differently about money. We don't think about money as our own. We think about it as the family's or something to share with our partner. And if you think about money in that way, you will be less willing to take risk with that. Now, of course, not all women are risk averse, just as not all men are risk hungry. But I think fundamentally the way we think about money, the way that we really want to understand something, and we're much more aware of what we don't know than men. Those factors keep us back from investing, and then of course the lack of role models.
So what comes out in the report is that women tend to favour cash, but that they also understand property and tend to favour property over stocks and shares. Why do you think that is?
I think it's an ongoing thing, and it's probably just not just with women. It's the tangibility of property, the fact that you can see it, the fact that it's easy to understand. However, as we know, property markets go up, but they also come back down. So that's a key thing. I also think that, we are, cash, you can see it in your account. There's this perception around the investment industry that was created since 2008 that, along with the banks, it's risky, it's not for me, finance is all about grey-haired men in suits, and that perception is what we need to change.
Okay. I mean, I invest, presumably you invest too, and the hashtag supporting this report is Get Invested. So we, both of us, I think, would encourage women to consider investing. What are the small steps do you think that women can, time poor women who maybe lack understanding of the stock market, but recognise intellectually that it's something they should do? What can they do?
I think the first thing that we have to recognise and tell ourselves is that it doesn't have to be rocket science. We don't have to be millionaires to invest. You can start with as little as £50 a month. The first thing is to utilise tax efficient vehicles. So if you have a workplace pension, get engaged with your workplace pension. How much are you putting in? What are the contributions that your employer is adding in? How much or where is that pension invested? And ultimately, is it enough? Am I on track for the retirement I want? Also look at ISAs and look at stocks and shares ISAs. It's a fantastic vehicle. All the growth in their capital growth, income growth will be tax free for as long as you keep the money within the ISA. And then if you're struggling, a lot of people open an ISA and then they think, oh, job done, but then they struggle with the underlying investments. Again, there are ready-made solutions like multi-asset funds where the difficult decisions around how you allocate to different asset classes, be it the stock market, bonds, resources, commodities, all of that is taken care of for you. And then the final thing that I always tell people is don't worry about how much you invest. That doesn't matter as much as when you start, because the earlier you start, the more time you have to benefit from compounding. Compound interest, the eighth wonder of the world, and that really is the game changer.
Okay, but I mean, it's also true to say, I think that even if you are starting late, it's still better to start than to do nothing at all if you're 50 and worried about your pension.
And that's what we saw over the last 4 years. We compared returns in a stocks and shares ISA versus a cash ISA, and just in 4 years the difference you could have made in returns as opposed to leaving your money in cash is staggering.
Yeah, and in terms of getting women more interested in what they're actually investing in, is there more that providers could be doing perhaps to, I mean, it feels like a lot of marketing in the past has been fairly masculine. Is there more that providers can do to maybe cater better for women's interests?
Yes, I do think we need to look at our advertising, our marketing, our language. All of those things can be improved. I also think there's a general perception out there among men and women that finance is boring. Finance is not boring if you become engaged with it, and the way to engage people is to make it interesting. Talk about the benefits, the outcomes. Don't talk about the pension or the product, the thing. Talk about the difference that product can make in your life, and tell stories. We all like a good story. We all relate to people's personal stories, and that really is the key.
Yeah, so this is about how to save for your children's university education, and how to save for all the things that you would like to do in retirement, the holidays you want to take when you retire.
Absolutely.
All of these tangible things that I think people relate to better than the actual product.
Totally.
And in terms of this idea of not having enough money, I mean that is a critical barrier, isn't it? And you started off by talking about that. This feeling of I don't have enough money. Is that always true? Is there a way that most people can save £50 based on your research on disposable income? Do you think it's true that most people have a little bit that they could put aside?
I think so. I mean, if you're willing to give up your daily coffee, and I know a lot of people aren't willing to do that, but small little changes like that can make a difference. As I said, you can start with as little as £50 a month. Now, if we all reviewed our finances, I'm sure we could find that spare £50, and that really is the game changer. And what I always say to women is, you know, there's not a lot, frustrating as it might be, that we can do about the gender pay gap, about getting the promotion or the pay rise that you want, but you can control your personal finances. And if you take ownership of that, you can change your financial destiny. And that is the key thing to realize.
And do you think that there is a role for talking more openly about money as well within the household, but also perhaps with your peers? It's something that we've written about a little bit on Good with Money. If you talk more about it, it becomes more relevant to your daily life.
That's right. So I think, you know, if British people shy away from talking about money, most people, it's not something that comes naturally. But financial well-being is as much part and parcel of your mental well-being. So it's very difficult to, you know, to feel calm in yourself if you've got money worries. And sometimes solving those money worries is just a question of sitting down and talking to someone. And it doesn't have to be an expert, because we all share the same challenges, you know, how to deal with debt, how to get started in investment, what do we insure, kind of basic conversations that you can have with your friends, at your book club, with your family. It makes a big difference, and it's also crucial within the family context. So what do you want to achieve as a family? What do you want to achieve with your partner? Do you share the same money aspirations? Do you have the same relationship with money? These are conversations that are crucial to your long-term financial well-being, and the quicker we become comfortable with having those conversations, the better.
Great. And in just to focus minds a bit on the difference between saving in cash and investing in the stock market, can you give any idea of the historic returns, a comparison of returns in cash versus stocks and shares?
Well, a good piece of research to always look at is the Barclays Equity Guild study. Now, that's research going back 150 years. It compares the stock market to cash to bonds. And over that period, the stock market has done exponentially better. In the last few years, the stock market has also outperformed cash. So that is really key. And if you want to really understand the difference between saving and investing in a low interest rate environment, saving at this stage is almost akin to putting money under the mattress. That money will get more just because you're adding more, but that money will never pay you an income. Whereas investing, you can actually grow your capital, you can draw dividends, that is drawing an income. Investing is a way to change your financial future, because, you know, in this environment where we are, where interest rates are low, where most of us don't have defined benefit pension schemes, so the Rolls Royce of pension schemes, we're all in defined contribution pension schemes where we need to take responsibility for how much we put in and the investment performance of those pension savings. In that environment, being a hard worker and an assiduous saver isn't enough. You've got to invest. You've got to take the plunge.
Okay. And just to bring it right back down to basics, it's one of those questions that a lot of people are too afraid to ask. What exactly is stocks and shares? What does that refer to?
So stocks and shares at its most basic is buying slices of a company. Right? Now, you might not have the research or the knowledge to do that, although I do think we probably know a lot more about companies just by looking at our everyday habits. Another way to invest in stocks and shares in companies, owning a piece of a company, is via a fund. And what you do, you give your money to a fund manager, and that person will allocate it across different company shares. The beauty of that is they make the big decisions and you get diversification. So instead of holding a slice of one company, you hold a slice of many different companies.
And those funds, they often have different risk profiles, right? So perhaps if you aren't sure how to choose a fund, because it can be quite difficult to choose, you can select based on your risk profile.
That's right.
And perhaps based on what we've said, women might tend to go for the cautious option, but is it worth considering some of the others depending on your circumstances?
I think so, because again, because we're in this environment of low returns on bonds, low returns on cash, the safer investments, you've got to look towards the stock market, because yes, the stock market comes with more risk, but the returns are higher. And if you are in it for the long term, which a lot of women are, we tend to be buy and hold investors. So we've got a goal in mind, whether it's saving for the first deposit on a property or saving for a child's education, and we stick to that. And if you've got that buy and hold mentality and you're in it for the long term, over the long term, again and again the research shows that the stock market outperforms. And if you want to sort of reassure yourself of that, just go and look at a graph of the stock market, different markets, the US, the UK, emerging markets, global markets, and you'll see that upward trend.
Okay, and in terms of what women like to invest in, are there any sectors that women tend to go for, or is it do they tend to have the same sort of appetite as men for?
I think women like to invest in what they know, and that is a very good thing. So if we look at if we look at technology stocks, or if we look at consumer stocks, there is a way of investing in what you know. And I used the example of Oprah Winfrey recently. So she took a stake in Weight Watchers. Now she knew Weight Watchers. She tried the plan, and she bought a small slice, not that small by her means. And over time, in the last 5 years, that investment has grown exponentially. So I do always say to women, you know a lot more about the world than you think you do, because of your shopping habits, or because of your sort of daily routine, and it always makes sense to invest in what you know.
Yeah, that's a great way of engaging, of course,
Yeah.
and really kind of wanting to put more in. If you look at the things that you understand and maybe you buy from those brands, that's a really, really helpful approach.
Yes, I mean, if we just look at the high street in the UK, how that's changed, how our shopping habits have changed from, spending afternoons going shopping to doing things online, already that tells you about the type of companies that are doing better, the kind of Amazon, ASOS versus M&S.
Yeah. Okay, so I mean, I think, we can safely say that something is better than nothing in terms of what you can put aside, and when choosing what to invest in, look for what you understand and what you know, and create goals for yourself, or identify what your life goals are, and then maybe look at how investing can help you achieve those over different time periods.
Yeah.
Would you say these are kind of
the key thing is, what do you want to achieve with investing? How long do you have to achieve it, and how much risk are you willing to take to achieve that? So those are the key things. If you're investing for your retirement and you say still in your early 30s, you've got a pretty long time horizon and you can take a fair amount of risk. If you're investing to put a deposit down on a property in 2 years, you might not be able to afford to lose that money, and you might bring down the risk. So those are the three questions. Why am I investing? What's my goal? How long do I have to achieve that? And how much risk am I willing to take to meet that goal?
Okay. I think with the first two, it's probably quite easy to answer those, but on the risk, I personally have found it quite difficult to know what my risk profile is, because sometimes I feel cautious and sometimes I feel like, no, I want to try that and give it a whirl.
It is a tricky thing, and it can change from day to day, and it can change as your circumstances change. So it is something to review quite regularly.
Okay, and are there any tools that people can use, women and men, to identify what their risk profile?
Well, increasingly online there are tools where you can type in what your risk appetite is, what is your capacity for loss, and that will usually kick out a kind of a multi-asset option, cautious, balanced, more adventurous.
Okay. I mean, I think it would be quite good to just end on this idea that women do have the power to invest, and it may be just worth considering what are the things, if you are interested in investing, what are the things that are holding you back? Is it an income related thing? Is it your personal psychology? Is it that you don't talk about it enough? Or is it that you feel like you don't know enough about it? And all of these things are worth thinking about, I think, for achieving all the life goals, and thinking about it in terms of what you want from life and how investing can help you achieve those things. Thanks so much.
My pleasure.
The campaign is a great campaign. The hashtag is Get Invested, and I do encourage anyone to have a look at the report, because I think if you are a woman, you probably will identify with a lot of what's in there.
What I'll add, the report is available on our website at fidelity.co.uk/women and money, and you can download the full report and watch some videos around our campaign.
Great, thanks very much.
Thank you.
Really nice to talk to you.
My pleasure.
Thanks.